The next rider that we'll have a look at is the accidental death benefit rider. And actually, there are two riders that are fairly closely related here. So the accidental death benefit, sometimes it's called double indemnity, and this is the frequent source of plots in movies and mystery movies and that kind of thing, where what happens, you have somebody who has, let's say, a face value of $500,000. Person is killed in an accident. If they have this ADB, normally what you'll see is another $500,000 of death benefit, bringing us to a total of $1 million. Now, it has to be an accident. The name of the rider, accidental death benefit. So accidents would exclude things like cancer, would exclude any kind of illness, or most lifestyle decisions as well. So it would cover things like car accidents, for example. But you'll find that this is a place where we do see some exclusions. In general, with life insurance, you won't see exclusions outside of the suicide exclusion clause. But normally, life insurance policies have no exclusions for things like drinking and driving, no exclusions for commission of a criminal offense. However, your accidental death benefit typically will exclude some of the things that I just mentioned, involvement in criminal activity, drinking and driving, participation in a riot or civil insurrection, if you were killed in war, participation in war. These types of things tend to be excluded from the accidental death benefit. So it really just covers the kind of routine accidents that people occasionally have, car accidents. It's a fairly inexpensive rider, but it has those limitations where it only pays in the event of an accident. It's generally not worth it, or not a wise idea, to incorporate the accidental death benefit into a needs analysis. If you sit down with a client and you figure with the needs analysis that the client needs $1 million worth of life insurance, don't sell them a $500,000 life insurance policy and a $500,000 accidental death benefit. It's not going to serve them any good. What if that person dies from cancer, for example? Well, they're not going to have this. They're only going to end up with a $500,000 death benefit. So the accidental death benefit is not a good planning tool. I would suggest you could use it in some situations, generally where somebody works at a dangerous job, for example. The accidental death benefit is not a bad idea, but be careful that you're not using this to replace the actual amount of life insurance that you should sell somebody. And normally with accidental death benefit, in order for the death to qualify under the conditions of this rider, the death has to occur within 365 days of the accident and has to be directly attributable to the accident. The next rider we'll look at is closely related, and that is the accidental death and dismemberment rider. Okay, so the accidental death and dismemberment rider, fairly similar. What happens with the AD&D rider is we essentially attach a dollar value to your physical being. And we say any loss of a portion of that physical being, that is a dismemberment, which includes, by the way, in today's AD&D riders, a loss of use. Any loss of use or dismemberment, any such circumstance, will result in a payment being made based on how much loss you've suffered. So it's a little bit morbid, but there's essentially a chart attached to this that says if we draw out the whole leg here, that maybe if you just lose your foot, maybe that's worth $25,000. If you lose your leg below the knee, maybe that's worth $50,000. If you lose the whole leg, maybe that's worth $150,000. Or if you lose the use of maybe both legs, maybe that's worth $250,000. Something to that effect. There's typically a death benefit as well attached to it. The death benefit is usually equal to the most significant loss that you can suffer. So maybe a $250,000 death benefit, maybe a $500,000 death benefit. And again, these policies have to have the loss occur as a result of an accident. The loss has to occur as a direct result of the accident, typically within 365 days of the occurrence of the accident. It's a relatively inexpensive rider. Again, it has many characteristics in common with the accidental death benefit that we looked at a couple minutes ago.